All right, good evening, everyone. Good evening and welcome to tonight's session once again. So this is our day 5 of the training. All right, yesterday was day 4, today is day 5. It's actually 8 days. So if we have today done, we'll be having 3 days left, which will be Wednesday, Thursday, and Friday. And this is where we are type of analysis. Forgive me, I'm showing something. I just want to rush it up so that I can concentrate. All right, so we have 3 types of analysis. We have the technical analysis, we have the fundamental analysis, and sentimental analysis. You can list them on your own. We have technical analysis. Technical analysis, fundamental analysis, and sentimental analysis. So the first one, so technical analysis, this is used by traders to study price movement. Traders study historical price movement in order to determine where price will go. It is used to study historical price movement in order to determine price. Okay, that's tautology. Technical analysis uses charts, indicator, and price pattern. So when we're doing trend, support, and resistance, all of what we're doing is called technical analysis. All right. Now, why are you looking at the trend? You're looking at the trend to ascertain which direction the market is going. Is it buying presently or selling? All right. Now we look at support and resistance, and you want to say if market come to this level, what should I look for? Now you want to wait for reaction. Then the reaction that will happen from that place will tell you whether you want to buy or you want to sell. That is technical analysis. We'll be going to the chart and we'll look through all of them. Okay, so now this is technical analysis. This is exactly what we did in the last how many days, okay? Now, look at this chart. This is IBM. IBM is actually the stock. All right, so this is trending market. Going like this is trending. Here they say trading. Trading, which means you can buy. The market is trending. Now, if you look at this market has been in an uptrend. All right, it's been moving in an uptrend. Okay, so you want to, on this particular market, you want to look for opportunity to buy because it's trending upward. So this is technical analysis. Like I said, we'll be going to the chart and we'll draw the chart, we'll look at the trade, and we'll enter the trade. So if you know you don't have your demo set up, I said it last week, that set up your demo, log into the demo account because we will be doing practical. So we'll do analysis in this session now, and we'll enter a trade. Okay, so we'll be doing analysis on synthetics so that we can enter trade. All right, we'll do analysis on currency at this time. The market has relaxed and there is not much movement in the market by this time. Okay, but synthetic is every time. Okay, so we'll be doing analysis on that. So let's see more. Okay, so you can see now all of these are what you want to look at for. Okay, so this is the beginning of a trend. Why is this place the beginning of a trend? So there was this consolidation around here. I don't know if you are seeing, you can see my cursor. There was consolidation around here, and this was where we have a change of character. So this was where you have a break below this level. Now this level, there was a break below it. Okay, let me show you what I want to show you now. All right, so now there was a consolidation around here. Okay, now all of this is a consolidation. Now this place highlighted say beginning of a downtrend. Okay, sell. So now there was a change of character here. So this was where the market break below this level. So as soon as the market break below this level, what happened? the market begin to sell. Now, the market came down to this level again and created, it's been doing higher highs, higher lows, but it came down here and it created this high, okay? And now could not take out this low again. All of these are what I taught you already. It couldn't take out this low again. It now created this too low again. Then this too low swallowed this previous low. Now this one is what we call liquidity sweep, all right? Or in the old term, you can call it fake out, all right? The old terms we call it fake out. Now, but this last low is still maintained. Now, something happened, and after this low was created, a high was created here, another low was created here, then before the break of this structure, okay? So this structure was broken, all right, and there was a retest. So this is the break. This one broke through, and you saw this retest. This is a retest, and the market continued. So this is where you want to look for buy opportunity. You enter this trade here, you are buying. All of these are the technical analysis. Now the trade went up, all right, created this low. Again, the market break below the low, did a retest, and what happened? It went down. So all of these things are technical analysis. Those are the things you want to look at. Those are the things you want to check before you enter a trade. All right, so let's continue. So that's technical analysis. We'll be doing that and we'll take a trade. Now, after technical analysis, we have what is called fundamental analysis. Now, what is fundamental analysis? So this includes political, social, and economic news that gauge how the market will do along with a country potential economic outlook. The performance of a country affects the outcome of the currency of that country. Now, fundamentals actually has to do with currencies, and why it also has to deal with stocks, you know, crypto and every other thing, because all of them are paired with the USD, all right? The USD is the factor that drives all of them. So all of them now respond to fundamentals, except synthetic indices. So now let's look at the indicators for fundamentals analysis. Now there are some indicators we use. When we say indicators, some of the things we look at, okay? So we look at Bloomberg TV, Bloomberg.com, ForexFactory.com, currency strength indicator, various economic calendars. So now in fundamentals, we also have the micro and the macro. All right, the macro and the micro. Now the micro are the calendar news. Now this is a calendar news. Now this is Forex Factory. Now what the calendar news does is that it gives economic data of the growth of that particular country using different metrics. So it can be GDP, all right, mentioning, looking at sales outlook, the sales pattern, either monthly or quarterly outlook, all right, employment, unemployment. Then, like in the US, the farming is a great deal in the US, and we have what we call the non-farm payroll, because farm actually has a great side of the economy, but there's also the side that is non-farm. All right, so non-farm payroll is actually a big data that also affects the US economy. Okay, so those ones I just listed now, they are called macro. They are called micro, rather. They are called microeconomic, micro fundamentals. Why are they micro? They are micro because you know when these news are coming. The calendar has stated that so time this news will be released. So you are working towards getting the feedback of that news before you make decision into the market as at that time. But there is the one we call macro. Now, macro fundamentals does not tell you anything. You don't even see it. All of a sudden, you have analyzed your trade. You are in a good trade, sweet trade with good setup, everything. All of a sudden, before you come back, there's one long week, boom. One long candle with production of wick. You just pierce through everything you have done, running like 200-300 pips in maybe 5-6 seconds. So those are macro fundamentals. So such are natural disaster. All right. Say you have Hurricane Katrina, you know, the tsunamis and the rest. The World Trade Center event, all of those ones are macro. Then when the president, like President Trump, speaks, you know, his words are power. All right. When he speaks, and if it has to even do with economy, all right, like he cut taxes with so many countries, all right, and increased most, and also cut ties with some business allies that were ripping off. All of those things are macro. So whenever there's no pronouncement are made, all right, it has a push on the currency, either positive or negative as at that time. So that's why you'll be seeing some unnecessary and unusual spikes in the market. You'll just be wondering what happened, what has happened, but something actually has happened, okay? So that is macro fundamentals. So this is fundamentals, and this is one of the things we actually want to be very careful with before we enter a trade. You have done your technical analysis, but it's still not enough. You want to check calendar, economic calendar to see, is there any news coming up shortly? Is there any news today? Is it coming up by 12 noon? Is it coming up by 7 p.m.? And all of that. You want to know all of that so that you know when you are placing your trade, you are sure that, okay, between this time and this time, you are not expecting any calendar news. But that is not void of macro that can come at any time, okay? So that's the reason why we trade with stop loss, okay? Now, if anything of such happen and you have such spike, your stop loss will take you out of the market, and the market will continue to do what it wants to do. You have agreed that this is the percentage I want to lose from my account. You have let go of that one. But if you are not trading with stop loss and you have such macro news, and it happens that a trade you were pursuing, maybe you were pursuing just $30, and by the time you come back, the trade is in $200 or $300 negative. That is if your account has not been swallowed, if your account is not, if it's not big enough. So that's why proper risk management is key if you are approaching this market. There is this saying that if you stop using stop loss, all right, you will eventually stop trading. A trader who stops using stop loss will eventually stop trading, because by the time you lose one account, lose two accounts, you borrow money to fund, you sell things, you know, things have really happened in this Forex space. People have borrowed money from cooperatives to fund accounts. People have sold everything they have, even without their wives knowing. They'll just be selling everything, you know. Why? Because they approach the market wrongly. And this space is one of the space everybody wants to claim professional. Meanwhile, there is nothing like professional. All right, you can only get better. All right, so let's look at the next one, which is the sentimental. Now, sentimental, so this is the overall feeling of the market. It emphasizes on how people respond to news and how they show up in the market. For example, people respond to the US election and how that will affect the market. It's basically people's feeling about the market. Now, this is quite explained, all right? Sentimental, you just look at the word sentiment. What's your own feeling about this news? A news has come out. all right? You are a trader, I'm a trader. We have millions and billions of traders around the world, millions of traders around the world. Now, when something happens, there is this feeling, you may be against, the other may be for, all right? So by the time you look at which side is weightier, as in which side is more heavier, which side are more people tilted to, is it for or against? So that is the sentimental analysis. And the sentimental analysis, all right, can actually be viewed with, okay, can actually be viewed with, okay, all right, viewed with some good, what's the name of this thing? Just the same way we have Forex Factory. There are other sites that actually show sentiment, all right? We'll show which is this sentimental analysis now. Okay, you say positive, neutral, and negative. So there are sites that shows that, why am I forgetting? I know I didn't put it here. Let me check. It's not here. It's not here. Okay, so these are things we look at, you know, in analyzing the market. Okay, I'm going to look for that. There's one site that usually to show you how many percent is neutral, how many percent is negative, how many percent is positive for. All right, but greatly sentimental analysis don't really play too much role it does, but it does not really have serious effect. If you can play with your technical and fundamentals, at least that's quite very okay. All right, so next on our I think that's supposed to be a trading plan. Okay, trading plan. Now, I was just looking at this document. I did not write trading plan. I did not write trading plan, but what is trading plan? So now please write. Please write. If you like, if you did not write, you will not have this thing because it's not on the document. Maybe you may only get to hear it again from the video. Okay, so trading plan. All right, so what is a trading plan? A trading plan is a document that guides your trading and your approach to the market. All right, is a document that guides your approach, all right, and everything you do in the market. So take, for instance, you want to say every day you approach the market, if you take the first trade, is a loss. You take the second trade, is a loss. You take the third trade, is a loss. You say you are not going to be trading again for that day. That's part of your trading plan. Number two, my daily target is 5%. Whenever I hit 5% in the market, I quit for that day and wait for a new day. That's part of your trading plan. Okay, so your daily targets. So the first one would be profit and loss entry. All right, you can tell me profit and loss entry. If I lose 3 times consecutively, I quit for that day to the next day. Okay, then number 2, daily target. You say your target is 5%. As soon as you hit that 5% for the day, you close your chart, you close all your trades, even the running, except for trades like good trades that you have now started, you have broken even, or you have started trailing stop. Okay, so such a trade, you can leave such a trade to run because that one will not give you a loss again. Meanwhile, you have hit your 5% for the day. That's trading plan. Now, I don't want to be trading any other pair than Euro USD, GBP USD, gold, and USD JPY. That's part of your trading plan. I don't want to trade under pressure. So when I have issues with my wife the previous night and we are quarreling, I don't want to, for that day, I just want to avoid the market. It's part of your trading plan. All right, but as time goes on, I will draft something on the trading plan and attach it to the document and also share with you. So this is just your trading plan. Now, we have confirmation checklists, and from the confirmation checklist, there are some things too that are part of your trading plan that you'll be seeing there. So as soon as we finish with confirmation checklist, I'm going to be going into the chart for us to look at the technical analysis. And we'll also go to maybe look at a Forex factory to show you what and what indicators we check on the Forex factory for fundamentals. Then I think we'll have to shut down for today. So let's go to confirmation checklists. So now you approach the markets. You want to look at what and what do I look for before I enter a trade? What and what do I check before I say, okay, this trade is a go. Let's buy or let's sell. My apple has been in my hand and the thing is changing color. So I decided to take a bite. So the criteria to look out for before taking a trade, the criteria include 1, trending. Now you can see how all of these things encompasses each other. Talking about analysis, you hear support and resistance. Now you hear trending. Now we have come to confirmation checklist. You're also hearing it again. So you want to check. You come in the morning, you want to look at the market, you want to check, is this market, is it buying? Is it selling? Is it on a consolidation? You want to check all of them. You want to check the higher time frame and check the lower time frame. Which direction that is more prominent for a particular asset that you want to trade? Say trending. This is going with the flow. Is it a downtrend or an uptrend? Check on higher time frame to determine the trend. So that's number 1. Number 2, support and resistance. Very important in trading. Looking out for major reversal areas, this is mandatory. All of these things are things we have mentioned repeatedly over and over again. But you just want to put them as a check before you pick a trade. You want to put them as a check before you pick a trade. Now, long wicks. This speaks of price action. Wicks tells a lot about decision being made in the background. They let you know that price wants to move in a particular direction. Wicks are more powerful together. When you see more wicks in a major zone, it tells you that price wants to go in a particular direction. Now I'm going to show you these long wicks. Now, when you have wicks in multiple wicks at a point of interest, that tells you that it's either if we on the sell side, which means telling you that the sellers are withdrawing, the sellers are weak. Now the buyers are beginning to come in. You'll be seeing more wicks in that market. I will show you when we get to the chart. Now consolidation. Consolidation, say this is sideways movement. Here the market is pausing. It's an indicator that the market wants to turn around or move higher. It allows you the opportunity to start to get a strategy in place. We're going to be seeing that. Then trend lines. Now, you know, we talk about trends and we also talk about trend line. I drew trend lines severally in my analogy and even in one of the images that is on this presentation. Say trend lines are diagonal lines of support and resistance. You want to see if the market is respecting your trend line. This is optional, but the truth is that it's not optional because trend lines play a very big role. All right, it plays a very big role. If you know how to use trend line, beautiful. Is one of the tools I use so much presently. Trend line. I use, if you see my charts, I'm always drawing trend line. Because a breakout of a trend line and change of character at the same time is a big return from wherever the market was going. Then price moving in direction. This is mandatory. You want to see that the price is going in a direction you think. So what this is trying to say is that you have analyzed your market and you are just looking at the market. But the market, you said the market should buy, but instead the market is still going down. 5, 10, 15 minutes is still going down. Then something is wrong. When you say this market should buy, you want to buy, within that first 5, 10, 15 minutes, even if the movement is sideways, it should be more of that direction you want to buy. You want to go into, whether buy or sell. But if the market is going the other side consistently, then just be sure that your analysis is not wrong, but you may have to wait. Okay? Now, because your analysis may be correct, but the market is still doing a correction. So it still needs to get to a particular level before it will bounce completely and start going in the direction you want it to go to. So that is the case that you may have to do some waiting. Now, one of the biggest thing here is patience. You need to do a lot of waiting in this market. If you really want to analyze and enter correct, smart, and sniper entry that you are following the market at the same time the market just make a new move, then you want to really be on the chart. You want to analyze and wait for that to happen. It takes a lot of patience. Then a retest. Now, retests are very key. Whenever a price breaks through a particular level, either a change of character or a break of structure or a break of even trend line, you want to wait for a retest. Now, a retest is, so if the market was selling and now it broke below a particular zone, you want the market to push up a bit for a buy to go back to possibly that level before it will continue downward as a new direction. That is what is called a retest. Then pullback, not necessarily a confirmation test, but if you miss a retest, you want to wait for a pullback. Okay? What it means is that after a retest, all right, there's a continuation. And if the market has moved, definitely there will be a pullback. So you need to wait for a pullback instead of jumping in. Because somehow, if you have been with me, you see me always saying a moving train. All right, you're jumping into a train that is already running, that has traveled far. It's just like you jumping into a moving train. You'll be crushed. All right, you want to wait for the train to slow down in a particular train station for you to enter. So that is where you have that pullback. All right, the pullback now will position you for the new move. All right, so still talking about confirmation checklist and all of that. These are some things you want to look at. All right. Now let me show you. I mentioned something about wicks. Okay, so when you have multiple wicks in a particular region, okay, especially a place of resistance or maybe a supply or demand zone, and wicks begin to create in a particular level. So can you see So look at this week, look at week. The market come to this place, but it's not able to sustain it, and it will come back. It will go and come back. Look at this time again. It still came, went with a very long wick. So this is the type they called a pin bar. All right, a very long wick. What this pin bar represents? It represents a reversal. Okay, whenever you see this pin bar, you know that the market is about to reverse. So this market was actually trending up. You can see it was going up. Then when it got to this place, okay, when it got to this place, it started having all of this. But by the time this guy, all right, did this as a pin bar, that is already a confirmation that this market wants to go down from here. Now that you have seen such confirmation does not mean that it may happen immediately. It may happen in the next 3 or 4, 5 candles, but you already have a confirmation. You just want to go to a lower time frame, all right, that is a higher time frame, to now get a better entry. Why? You know that for this type of trade, your stop loss will always be above this wick of this pin bar. Okay, so this is when we talked about wick. All right, so now let's talk about break and retest. Now this was a level, all right, a level of support. When the market was coming from this side, it was a support. So this was a support. Now the market broke through the support. So this was how the market broke through the support. But can you see this week, this candle that came back in here is called the retest. So this is the one I was talking about, retest. So this was a break and this is a retest. So after the retest, you got this candle, all right, and this one, then the markets continue. Again, within this point, the market came back again to this now because the support is now resistance. It came back, rejected, and still went down. All right. Came back the third time again and still went down. The market is gradually going down because now, one thing with this market is that there is a direction for the market. All right. The market has a direction. It's going in a particular direction, but yet it's not moving in a straight line. It's not moving in a speed. But if you leave the market for like 3, 4, 5 days, when you come back, when you see, this thing that was doing as if it's going up, the overall direction is down. So you can see this first move created this. The second move created this. Now this is the third move. It's already, so you can see that this is higher than this, and this is higher than this. So the market is trending down, but the trend is not a smooth trend like this one that you have a smooth trend that went up. Okay, but the overall direction of this particular market is a downtrend. Now, these are actually this is where the serious stuff, what we're actually doing now is no longer basic. What we are doing right now is intermediate, all right? Intermediate, we're gradually going into advanced. Those are what we are doing right now because all of these things I'm showing you now, I was not taught in my basic class, okay? And I even taught myself most of these things. I had to learn the hard way, all right? Years in trying to know them. Okay, so some of the rules to abide by when trading. All right. We are coming to the end of the presentation. Every other thing will be practical from tomorrow. Practical, I'm going to give you a strategy that will set on your phone, set on your laptop, that you'll be using to take trade for by yourself. Network challenge, can hear some of the lectures. Bite your bite. Thank you. Make a bite on another one, sir. All right, so let's look at the rules. They are very, very important. So the first one said, do not trade under pressure. Do not trade with greed. But greed is one of the things that kill us in this market. Greed is very serious. Now you have a $100 account and you have made $10 for one day. That is 10%. You're still not satisfied. You still want to go and be taking more trade. Now, at the end of the day, you will lose that initial $10 profit you have gotten earlier and still lose part of your equity. Why? Because of greed. But if you were content with the first profit you have made for that day and rest, wait for the next day, you would have started on a new slate and fresh, you know, without that. So that's what we call over trading. So all of them are greed that caused them. Then don't be in a haste to make money. Be patient. All right. We're always in a hurry because the economy is not smiling and we have a lot of responsibility. School fees, house rent, you know, day-to-day living. You want to, so everything is calculated. You want to make sure that you get something that will cover up for this thing. So you want to make money sharp. Now, if you are a good number of persons here, they started, they've not even learned anything. They want to start trading live. I said, no, that's not how this is done. The first thing you must do is to trade with your demo. Whatever you have learned, trade with your demo. All right? Even if you have the millions to fund your account, don't be in a hurry. I'm not the type that say, oh, fund with me. No. Just trade with your demo for a while. You will learn a lot using that demo. You will learn everything that has to do with lot size. You will understand the different assets, how they move, they are how volatile each of them is. That's when you will learn all of that. But most persons know, they just want to, maybe they've seen that people are making money. You want to start making your own immediately. Before you know, you blow your account. And do you know what happened when you approach the market in that manner? Instead of you to concentrate on learning, you will now start revenge trading. There's what we call revenge trading because you now be going into the market to, you want to go and collect back the money the market has collected from you. So you will now go to, you go and bring new money. The first one is gone, you bring new money. Now you are pursuing, you want to double that money. I mean, you want to recover the one you have lost and also make, you know, profit on this one. That's when you start making all of the mistakes in the world. And before you know it, you are, as in something will just be happening to you. You won't understand yourself. You won't be listening to anything learning. Whatever they are saying learning is, now you are not really good on analysis yet. You know, you were waiting for signals and all of that. Because you're already in that category, you won't wait for signal. You'll be on your own with the little you believe that you have learned. You'll be taking trades. Before you know, you blow account 1, 2, 3, 4, and you start selling your properties. You know, but that will not be your portion in Jesus' name. Amen. It has happened. That's just the truth. A lot of people approach this market very wrongly, and at the end of the day, it becomes something, you know, that's why not much persons if you approach 100 persons who have actually been in this market, all right, 90% will not tell you a good story. Why? Because of the way they approach the market. Out of the 10% that is remaining, they will tell you the story the way it is. But out of that 10%, maybe it's only 3% that is really profitable. Now, don't let your losses run. Cut short your losses. Now, this is where stop loss come into play. Now, you'll be in this market and something happened to us yesterday. There are trades we took yesterday. Two out of those two trades hit stop loss. That is just kiss the stop loss. When I say kiss with a very little point, and the market went in the direction. All right, and hit TP1 for the two of them. Now, those situations, we see them all the time. Now, some person will say, it's sure most times this trade that is going like this, that's how the other day, they're down after I hit stop loss, it now went and go and do the normal, this is short, I want to remove the stop loss. You know, the trade you were supposed to, your stop loss was supposed to maybe like $5 or $6. And now, because the market has come down, we're seeing $4 plus. You say, no, instead of me to short, let me leave it. I will remove the stop loss so that, you know, the thing will come back. you remove the stop loss, that particular trade will keep running down. Instead of taking that $5 from your account, at the end of the day, by the time you check it, it's already like $40 negative. Why? Because you remove the stop loss. So that is not adding to your losses. You don't need to add to your loss. Whatever loss it is, the reason why we have the stop loss is we said this is the most we can lose. And before you go into a trade, you already make up your mind. So don't add to it. Then do not cut short your profits. Let your profit run. Take partial profit when necessary and allow the profit to continue. Now, this has to do with psychology as we grow in this market. The truth is that we are quick to close our profits because you just see some blue say, I'm not going to allow this one go back. Yes, not in all cases. Now, if you really understand the structure, you understand the market, you know that there is always a pullback. There is always up and down movement. Not that the way the thing just went up, that's how it will just go straight. No, you know, it will go, come down just like that, dancing, but at the end of the day, it's going in a particular direction. But because you just saw your profit, the thing is just in profit, in short, let me close it, you close. Now, what is happening to you now is that when it is stop loss, you are allowed to hit stop loss. But when it's take profit, you will not allow to hit TP. Now, the point is this. If your trading would have been maybe 1:2 or 1:3 risks to reward, if you cut short your profit like that, the profit that is supposed to cover up for 1 or 2 losses you have incurred, you will cut short those ones, and at the end of the day, you will still be in a loss. But if you have allowed those trades to run to their destination, those ones will be the one that will cover up for 1 or 2 that has hit stop loss, and you will still make profits at the end of the day. Though this is, you grow in all of these things, because when you begin to approach the market and when you trade with demo, you'll be free doing all of these things. But when you put your money for the first time, I tell you, you will not sleep. You will not sleep. You'll be looking at the charts every 5 minutes. You want to see, this thing never hit TP, this thing never move, you know, and all of that. Because where your money is, that's where your heart is. All right. But over time, you grow, you mature, you get, as long as you have decided that this is what I want to do, you need to develop yourself. And over time, there are things you will see. It happens to you the first time. It may pull you away somehow. But by the time it happens once or twice, you know that, okay, this is normal. It does not touch you again. Now, people like us, someone like me, I've grown thick wall, as in thick skin. Thick skin. When I started this journey, I was trading with $20, $30, $10,000. All right. When I've not known nothing. I have lost a stretch of the first deposit I made was $10,000. I lost it in 1 week. All right. I deposited 20 again. That one, I didn't know anything like FMOC or anything. I did that on a day of FMOC. I was trading gold. The thing was that was how I finished that account. So you see all of those, you know. Now it happens that all of that, you know, I told you something about revenge trading, right? Now that 20,000 I funded, I wanted to make that 10,000 initial back and begin to make bets. The more I try, the harder it becomes, until everywhere became red. It did not end there. In short, my first approach, the first 6 months into this market, I gave the market a duplex. Give the market a standard duplex that you can think of. All right. So by the time you put your money, you will know that it's different. So don't open multiple trades with high lot sizes on a small account. Don't risk more than 3% of your account. Use minimal lot size. Don't trade without stop loss. I've said this over and over again. Don't compare your result with others. Okay? Okay, so these are actually account size and what your lot size should be. All right. So proper risk management, $100. Your lot size should be 0.01, and you must not take more than 3 trades at a time. 3 trades. That's 3 positions, whether they are different assets or one particular asset. Okay? That is the normal and proper practice. Then $200, you should be trading with 0.02. $500, you should be trading with 0.05. $1,000, you should be trading with 0.1. $3,000, you should be trading with 0.1 to 0.3. All right, depending on, you know, then this one or one standard lot size is even a risk. So these are some of the guide you need to trade profitably. All right, so let's look at this 11 trading rules that work. If you know, okay? Now, trading is not an investment, okay? It's not gambling, so you should plan your trade, okay? Avoid the open, review your trades, have a stop loss, have a target. Now, your target is your take profits, all right? Best trade only. Now, this language, best trade only, is you analyze like 4 or 5 trades, all right? There is the one that have more potential because you will see that it gives you all the bullet points that you need to enter a trade. All of them are marked, okay? So there's always best. By the time you look through 3 or 4 assets, there is always the one that have met all the conditions that you need to see before you enter a trade. Be in control, all right? Trade small and accept losing days. Now, another thing you need to note is this. If you cannot accept losses, then you can never get wins in this market. Losses are part of the game, all right? Losses are part of the game. If you cannot accept losses, that you just say, no, I beg, I don't want to take loss. Now, I had one lady who, I didn't know that she sounded like she was trading, that she trades derivatives, this, that. And she funded $200. Okay, and she started trading. So I was so surprised when she called me that said that the $200 is now remaining $110. That in short, she does not want to lose the money, this, that, and all of that. I said, how come? Just within 3 days, what happened? That the trade she took, one thing, do one thing, then she now take another one. She now, she saw the thing, it was going up, she bought, all of a sudden the thing started coming down, this, that, and all of that. 1 second, please. So I thought you said you've been trading, and all of that. I was very surprised at her, sorry for the break in transmission. So I was so very surprised when she she said she can't take any trade again because she does not want to lose the money, that she even borrowed the money. I said, oh, sorry. So I told her, please don't trade again. I thought the way you sounded like you are good in the game and all of that. That she has been trading derivatives, this. That's okay, no problem. That I should trade the account for her. I just laugh. I said, I don't trade for people. I wish I don't do that. I don't trade for people. I don't manage people's accounts. Okay. She said she will not trade the account again. I say, well, if you will not trade the account again, then better withdraw the money. And, but if you really want to make something from this market, losses are part of the game. You just have to know what you are doing. I encourage her to go back to her demo and trade with her demo and master a lot of things before going back to the live. For some time now, I've not heard her voice. So please don't be that type of person. Always try to do the right thing, okay? accept the losing days and losses are part of the game. Thank you very much. God bless you. So this brings us to the end of the presentation. Thanks for your attention. All right. Okay, so we'll be going to the chart right now. Let me minimize this guy. Let me minimize this guy. Okay, this guy. So this guy has really dealt with me today. The guy dealt with me from midnight till this afternoon. It was still dealing with me. So I had trades from last night that I was in a buy. This is good, by the way. Okay. This is good, by the way. I came here to show us some things, right? So we'll be doing all those support and resistance we talked about. We'll be doing them here. Now, what happened is that I was in a buy on this guy. And before dawn, all right, by the time I woke up this morning, I saw that I was in a huge drawdown. All right, I left and somehow they all came down and hit stop loss. Said, okay, no problem. And I waited for the market to mature and come back. So this was my base. So now when we talk about support and resistance, now I drew this as a point of interest, right? So I wanted to see what the market would do from this level. That was why I drew this level. What's wrong with this thing? Okay. So I wanted to see what the market would do from this level. So now look at what happened. Now the market came down, all right, to this level, it bounced, came again, and created this was a more like a sweep of initial, it swept this liquidity because the market came down and swept all of this liquidity. So I thought, okay, we were good. Then it created this low, and it broke this. So this was the first change of character. So the first change of character, let me get a brush. So let me use brush here. Okay. So this was a change of character. Okay, this level was a change of character. It went up, came down. So by the time the guy gave this leg, I now entered the market. I entered from here to begin to go back up. And my stop loss was just here. So can you see where my stop loss is and what's happened? This is called liquidity sweep. So my stop loss now, meanwhile, I thought liquidity has been swept. So I entered the trade. I have 5 positions, you know, because the 5 positions have different take profit level as the market will be moving up. Behold, by the time the thing came down, swept everything, swept me, and as soon as it swept, the market came back up. And that is the movement that you have seen that is now the upward. And this level was my first TP. So the market would have hit my TP by now. Now, I entered, this first move did not hit the TP. Okay, because this thing was here, I dragged it down here, did not hit the TP, and came down, take me out, and this movement, so this was when it later hit the TP. So that is the analysis we are talking about now. So what I'm going to do now is that let me take out this in short, let me delete everything. Okay. All right, so this is a naked chart. Now this is a chart. Now I want to trade gold. I want to analyze gold. This is the level where the market is right now. Okay, so first of all, I want to go to daily. What has this market been doing all day? Now, if you look at the daily, you see that the market has been trending upward. Okay, then it got to this level. There was this pullback. It continued. It got to this peak. This level happened. It continued. Now it came down and it broke. We had a change of character. Okay, so there was a change of character here. There was a change of character here. Now, after a change of character, definitely you will always expect the market to go back to origin, all right, to probably cover the fair value gap or come and kiss the other block that has been created. So this market came back up to this level. And right now, the whole of today, the market has been selling. So you want to scale down to 4 hours. Now, when you scale down to 4 hours, this market is like this for now. Now, what happened at this level right now is that we're analyzing this market. Please note. So this market came down and has been creating okay. So this is where the market is right now. Now, but before this happened, this was a change of character. This was a change of character. So what this means is a change of trend, okay? So this was where that thing happened. Now, that's number one. You've seen this as change of character. Another thing you want to do is to now put a trend line. Because when this thing was trending up, it created this trend line. Can you see? It was a perfect trend. It created the trend line and it broke below the trend line. So let me take out this part. Let me take out the part. Okay. So it broke below this trend line. Now, this market, what is it trying to do now? It came down. I think the market is trying to go back up, probably to this level. Do we have a gap? Okay, so there is no gap here. All right. So probably this is where this guy has come back to. So what it has come back to do now is to trying to cover this gap that was created from here. So right now, the market has entered this region. Now, what we want to look for here is we want to see a reaction from here that will send this market down. Okay? So from this level, I think we are better off selling. So this is what you need to do analyzing a trade. Now, are you going to enter now? No, you are not going to enter this market now. This market has come here. What you want to do, see, is a reaction from this place on a lower time frame. So now let's go further to probably 1 hour. Okay. So 1 hour, there is already a rejection. A candle was rejected. Candle was rejected, and can see the wick. And here, a bearish candle is printing from there already. So let's go to like 5 minutes. Okay, so now on this 5 minutes, again, you want to see another level of change of character. A break, a possible break and retest. Okay? So you can see now this is a perfect trend. So you can see that this drawing does not finish. Can you see that it has broken this trend right now? The market has broken the trend. Okay? The trend is broken right now. So you want to wait for a change of character. Now, this is the previous low here. So you want to wait for the market to break below this place and do a possible retest and a continuation. Then you are fine going further down. So this is an analysis we have done. All right. Well, let me stop recording here. We have from tomorrow, the whole of tomorrow, next tomorrow, Friday, all of these practicals we'll be doing. We're going to take trades on our demo right now. So I'm going to go to, sorry, hold on. I'm going to go to, I forgot this guy. I'm going to go to synthetic indices, and we'll do some small analysis and take a trade on our demo. I believe we have logged into our demo account. We've logged into our demo account. So with what we have right now, there is not much time. I don't want the recording to always be too long. So I'm going to stop this recording now before we go into taking that trade. Okay. So let me stop this recording.